Tokenized securities have evolved from experimental pilots to fully functional components of institutional finance. What was once confined to innovation labs and regulatory sandboxes is now gaining traction in live portfolios, covering everything from tokenized treasuries and private credit to real estate. As this adoption continues, one essential piece of infrastructure is rising to meet demand: institutional market makers. These firms are quietly powering the liquidity that tokenized markets need in order to scale. Why liquidity providers are essential? In traditional markets, exchanges and broker-dealers form a well-established network for liquidity. There are standard processes for price discovery, market depth, and settlement. But when assets are tokenized and traded across decentralized platforms, liquidity becomes more fragmented. Tokenized securities introduce new complexities, varying smart contract standards, cross-chain mechanics, and on-chain settlement delays. Without support, even well-structured digital assets can struggle to remain tradable or attract institutional capital. This is where market makers play a key role. By quoting both buy and sell prices, maintaining on-chain inventory, and facilitating execution across platforms, institutional market makers stabilize these evolving markets. Their operations make tokenized securities more accessible, help reduce slippage, and support price integrity. Key players driving liquidity. Firms like Flowdesk, Wintermute, and Keyrock have emerged as leaders in this space. Their models blend elements of traditional prime brokerage with blockchain-native capabilities, embedding custody, compliance, and smart contract integration directly into their liquidity services. These firms operate on both centralized exchanges and decentralized platforms. Their strategies are often algorithmically driven, enabling them to respond to market conditions in real time while managing token inventory across multiple venues. In practice, this creates smoother trading experiences for both retail and institutional participants and ensures that tokenized assets can be efficiently priced and transacted even in emerging or low-volume markets. Enabling tokenized RWA ecosystems. As platforms like Centrifuge and Ondo Finance bring real-world assets on-chain, whether in the form of private debt, real estate, or government securities, the need for healthy secondary markets grows. Market makers ensure that institutional investors have the flexibility to enter and exit positions without disrupting price stability. This liquidity is not just about convenience, it's about functionality. Institutions need confidence that tokenized instruments will remain viable post-issuance. Liquidity providers deliver that confidence, making the entire ecosystem more resilient and attractive to capital allocators. Regulatory alignment and infrastructure maturity. The regulatory environment is also maturing, with frameworks like the EU's MiCA and evolving guidelines in Singapore and the US. Liquidity provision is becoming a regulated function. Market makers must now meet standards around transparency, operational security, and auditability, much like broker-dealers do in traditional finance. To keep pace, many are collaborating with digital asset consulting firms to refine their pricing models, incorporate ESG screening, and comply with region-specific rules. These partnerships are helping bridge the gap between blockchain innovation and traditional regulatory expectations. A recent report from the BIS Innovation Hub even projected that tokenized assets could represent over $16 trillion in value by 2030. But to reach that scale, liquidity infrastructure must continue evolving, and market makers will be central to that process. How Kenson approaches the shift. At Kenson Investments, we see institutional liquidity providers as a critical link in the tokenization value chain. Their role goes beyond trading. They help shape the operational readiness of tokenized markets. Through our research and consulting practice, we support institutions looking to engage with this emerging layer of infrastructure. Whether it's understanding how tokenized assets move, building strategies around digital liquidity, or navigating compliance in new markets, we're here to help. To learn more about how tokenization is changing the way markets operate and what role liquidity providers play, visit kensoninvestments.com.